Welcome, dear traders. You are watching a recap of the Asian session. China celebrates Lunar New Year, so Asian investors are off for a week-long holiday. It somewhat limits trading activity in the Asian markets. After explosive growth on Wall Street last Friday, the stock indexes in Australia and Japan also jumped on a Monday, reaching monthly highs. Let's discuss what factors affected the sentiment and the trajectory of the main currencies. Will the recession begin this year? This is the main question and the driver for markets. At the end of last week, several reputable agencies provided their forecast. So, Kristalina Georgieva, the managing director of the IMF, said that the global economic outlook is not as bad as feared a couple of months ago. The NABE published a study in which it lowered the likelihood of a recession in the United States to 56%. 3 months ago, this indicator was almost 66%. Analysts at JP Morgan pointed at the 7 market indicators which helped ease concerns about an economic downturn. Apart from that, several Fed members spoke in favor of a less aggressive tightening. Last week, speculators hit a chorus of mixed comments from Fed members. Some of them were hawkish, while others were extremely dovish. However, the economic situation in the United States continues to deteriorate at a fast pace. Everyone is betting on a 25 basis point rate hike. At the last meeting, the regulator raised the key rate by 50 basis points, snapping a 4-month run of a 75 basis points interest rate increases. On December 14, Jerome Powell warned that the regulator would continue to hike the interest rate, and the full effects of a concerted policy tightening have yet to be felt, as Fed policymakers will not provide any remarks till the meeting. Christopher Waller's speech last Friday was the last one in this series of comments, and he said that the favors of a 25 basis point interest rate increase at the next meeting. Yet he also stressed it's not time to declare victory on inflation, and this is why he's strongly committed to further tightening. And the Fed's blackout period will last until the meeting scheduled for February 1st. The US dollar is unable to assert strength due to expectations of a small rate hike. The overall weakness of the US dollar index against its rivals is likely to persist. In the Asian session, the greenback fell to 101.60 points. Shortly after, it recovered to the 101.70 points level. As Fed members remain silent, traders are going to look for clues in a macro stats. Likely, there will be a batch of fresh economic reports this week, such as the Consumer Price Index, GDP data, durable goods orders, etc. Yet various agencies, which will also publish their forecast, may adversely affect optimism. However, it will hardly impact the trajectory of the greenback. It's likely to move within a bearish trend. In the Asian session today, it was trading in the downward range of 101.60 and 102.00. As usual, the yen took advantage of a drop in the United States dollar, and the dollar-yen pair dipped to an intraday low of 129.20. The Japanese currency also went up amid expectations of a policy reversal both by the Fed and the Bank of Japan. A shift to a hawkish stance by the Bank of Japan and the post-any monetary tightening by the Fed should narrow the rate gap between them. It will certainly help the yen rise versus the US dollar. Another bullish factor was falling US government bond yields. Nevertheless, the yen failed to retain a bullish momentum. In the Asian session, it advanced to 129.10 and 130.30. The psychologically important level of 130 acts as a resistance. Another one is located at 127.20. The bears seem to be aiming at this level. Judging by the pair's movements, the yen will hardly resume an upward movement amid expectations of a hawkish move by the Bank of Japan. According to the meeting minutes, the monetary easing would continue in a sustainable manner. At the weekend, the Japanese Prime Minister Fumio Kishida stressed that it isn't the time now to revise an accord that the government set with the Bank of Japan in 2013 to help it achieve its 2% inflation target. The Australian dollar kicked off the new week with a rise. It managed to recover to 5 months highs amid improved risk appetite and the weakness of the US currency. The AUD USD pair was trading near 0.7008. It made an attempt to consolidate in the bullish channel of 0.6958 and 0.7012 amid the holidays in China and sluggish trading in Europe this morning. The Aussie is also growing ahead of the Reserve Bank of Australia meeting and the release of the Consumer Price Index. Traders are anticipating a 25 basis point rate hike at the Reserve Bank of Australia's February meeting. Fading fears of a global recession and talks about a policy reversal by the Fed are likely to stimulate the bullish trend of the Australian dollar. Apart from the United States and the Australian inflation reports, there will be other macro stats, namely the PMI indexes for January, unveiled by the United States, the United Kingdom, Japan, and the Eurozone countries. It's always easy to find a proper entry point if you have the latest market news at your fingertips. Subscribe to our channel and keep close tabs on the market developments. Please leave comments down below, and thanks for watching. See you soon.